My name is Jeff Boutilier. I'm the president of Ascent Strategy, and I'd like to welcome all of you to our first Business Resilience Series event. You might be wondering why we've chosen to host this event. And what we really found is as this COVID-19 crisis hit us, there was a real need out there for accurate information, timely information, and for businesses to have access to some expertise that perhaps they don't ordinarily have. We know that businesses really need to take a purposeful approach to navigating the current crisis, having a clear plan of how they plan to access relief, and not only how they'll use that relief, but how they'll make adjustments to their business plan in the short term to get through this. We wanted to help folks bring all those different elements together in that plan, their timing, how they're going to resource them, and how to get everything done. We also know that businesses need to be considering a variety of scenarios out there right now. What if this goes on longer than we expect? What if it has deeper, more lasting effects on consumers and their behavior? We know right now that for every person out there itching to get a haircut, there is someone wondering if they needed as many haircuts as they used to get. And for every person out there itching to book a trip somewhere exotic, there is someone a little bit frightened who might put that off for longer than we might think. So while we're trying to stay as optimistic as possible that the resilient folks here in Canada will weather the storm, and we're certainly doing very well when you consider what's going on south of the border, we're also trying to be very realistic and ensure our plans contemplate a variety of outcomes. And that brings us to the series. It's a community-driven initiative. I'm very pleased to have some great community partners on board I'll introduce you to in a moment that have come together to try to make sure as many people as possible can connect with this information and have this access to our experts. It's completely volunteer. All of the folks that are joining us today are very busy in their own businesses and helping their clients navigate these difficult times. And they've given us 2 hours out of their day today to answer your questions, and we appreciate that very much. We'll introduce you to all of them in a moment. And we really have one singular goal, and that's helping businesses navigate the challenge. The goal here is to make sure that we're doing all we can as a community to see as many businesses get through the other side of this as we can. I mentioned earlier that this is a community initiative. We have some great partners. Our organization, Ascent, started a webinar series earlier in the month, or earlier in March rather, had really great uptake and a lot of great suggestions and learned a lot of lessons in doing so. And we're now happy to partner with the Regina Downtown Business Improvement District, CoWork, Regina Economic Development Authority, and the Regina Warehouse Business Improvement District to bring you this series. In terms of our agenda today, we wanted to introduce the Business Resilience Series and what it's all about, and I have just a few more notes on that before we get underway. I'm going to give you a brief presentation on some of the new developments on the federal and provincial relief programs that are available to small business. We'll introduce our panelists, get you familiar with all of them, and have some introductory questions for them to answer for you. And then we're going to get into the bulk of what we hope is today's session, which is a moderated panel discussion with your questions. We'll talk a little bit more about that format in a moment, but it's important to understand that you have a Q&A button available to you in the Zoom client. And if you use that Q&A button, you'll be able to submit your questions by typing them in. That's quite helpful for us because some of your questions will come in as a result of other questions and it'll allow me to direct them to the panelists appropriately. You can also use the raising your hand function in the Zoom window to get my attention. And we can activate your microphone if you'd like to speak to the panelist, ask your question directly. But certainly that text-based solution is likely going to be your best bet to get your question in. In terms of the series, not all of these sessions will be the same. We intend to host one initially every week throughout April. We're going to try to match the topics that we cover to the stage of the recovery that your business is going through. So at some point, we might want to have a session with some experts that could help us imagine what some of the lasting impacts might be to consumer behavior as a result of the crisis. Right now, however, we know for many of you it's about survival, accessing relief programs, renegotiating agreements, and making sure that you can get yourself to a relative position of strength to make your next move as you navigate these difficult times. The only way that these things will be successful and to keep going on is if we keep seeing lots of folks join us for these sessions. So we encourage you to help us get the word out, invite your colleagues in business to join us if it might be of benefit to them. You can use our website, which is resilientseries.com, to submit questions ahead of time. This will help us select panelists that can answer your questions and also help us organize future topics. And also, that's a great website to maybe toss into your bookmarks. It's a great way to access the partners' websites, and there's some great information out there. Economic Development Regina is undertaking to try to have all of the different programs listed on their website and up to date all the time, so I encourage you to check that out. And it's also a great way to go revisit these sessions if you miss one. Which brings me to my last point, which is that these sessions are being recorded and will be made available online. So if you do choose as a participant to speak to our panelists, you're consenting to having that recording of your contribution posted for the public to review online. Before we get underway, just one important point of clarification, a bit of a disclaimer, if you will. This is a volunteer effort to provide the community with information, analysis, and access to expert opinion at no cost. As everyone knows, new information is coming out daily, situations evolving rapidly, and every individual business situation is going to be different and unique. This webinar series and any recordings thereof is provided purely for general information purposes. It is not a legal or professional advice, and no one today should act on the basis of the material in this webinar without obtaining professional advice specific to their situation. So with some of the formalities out of the way, I'd like to quickly walk you through some of the relief program developments that might be relevant to your business, and then we'll turn it over to our panel. There's been a lot of talk about new credit availability being injected into the Canadian market. Some of you who were on our earlier call or who have been following the news will be familiar with the Business Credit Availability Program, the BCAP. Since earlier in March, there's been significant new capital added to this program. And that capital is being used to offer additional credit solutions to businesses that are affected by the crisis. And those are principally being delivered through the Business Development Bank of Canada, BDC, and Export Development Canada. As I mentioned, they're offering new credit solutions, some of which can be applied up to certain limits online through BDC's portal, and improved terms on existing credit, better interest rates, better repayment terms, payment holidays, that sort of thing. But I do note that since these things have been announced, there's been a very significant backlog. So just to illustrate that, Business Development Bank of Canada traditionally would process a small loan application or a working capital application in a matter of days. A lot of folks we're hearing from submitted their application 2 or 3 weeks ago and still haven't seen much back other than a confirmation that that application has been received. So if this is something that you're going to need access to or are considering accessing, we encourage you to get involved in the application process as soon as you can. Now, the piece that's probably the newer development that quite a few businesses are interested in based on what we're hearing is the Canada Emergency Business Account. Now, this is a $40,000 loan that's fully guaranteed by the Canadian government that's going to be interest-free and principal repayment free for your first year. Now, if you're able to pay this back by December 31st, 2022, up to 25% of that, or $10,000, would be forgiven. So essentially becomes a grant at that point. So very attractive terms. And to qualify, there's a few details, but the biggest one is basically you need to have had $50,000 to $1 million in payroll in 2019 to sort of establish yourself as a qualifying business. Now, there's some interesting details that have emerged about this program. So firstly, one question we're getting a lot is on the timing. Most of the major chartered banks are endeavoring to roll out their application processes for this money this week. Many of the credit unions have since gotten on board with this program and plan to offer it to their clients as well. The application process, unlike some of the other relief programs that are being offered, does take place through the financial institution that you normally bank with, so that's something to keep in mind. And as I mentioned, there's no interest and no principal repayments for that first year, but interestingly, there can be a holiday, so no principal repayments for as long as up to the end of December 31st, 2020, or excuse me, up to 5 years, 2025, depending on the bank you use. So just to clarify that point, because I misspoke a little bit, you don't need to make principal repayments in the first year of the loan. You don't need to make interest payments. After that, it becomes an interest-bearing loan, but you actually don't need to make principal repayments if you choose not to until 2025. And that essentially means that your loan instrument converts to a 3-year term loan on December 1st, 2022, with a 5% interest rate. Now, one question that comes with this as well is, am I automatically going to qualify for this simply because the Canadian government is underwriting the risk? And the answer is, it depends. Most banks are indicating that it still requires you to be in good standing with them as an existing borrower or client. And so there's obviously going to be some checking into your credit worthiness and the viability of your business. Presumably those standards will be relaxed to reflect the crisis we're in right now, but something to bear in mind. One other point on business credit availability that I wanted to flag is that if you're an agribusiness, there's been $5 billion in additional funding made available through the credit side of FCC, Farm Credit Canada. And that includes a variety of initiatives, including payment deferrals, new lines of credit, and more aggressive interest rates on existing debt. Now, the big piece that's been in the news lately that has a lot of people, I think, feeling hopeful, but also has a lot of questions on people's mind are the wage subsidy developments. So there's two programs under the wage subsidy development. And the one that's been making the most waves in the news cycle right now is the Canada Emergency Wage Subsidy, which is this 75% wage subsidy that people keep talking about. Now, when it was announced, the basics of the program were that you needed to demonstrate a 30% or greater loss in your gross revenues from the same period the previous year. And this was going to be valid for March, April, and May. So if your business in March was down 30% or more from the revenue that you generated in March of 2019, you would be considered eligible for this subsidy. The subsidy was going to be backdated to March 15th and effective for your payroll cycle through to June 6th. And the limits were quite a bit higher than the original 10% small business wage subsidy that was originally announced, in that they cover 75% of your wages up to the first $58,700, which works out to just shy of $900 a week for most employees that hit the top of that range. Now, it's a CRA managed process, so we're encouraging folks to go out and sign up for their CRA online account if they haven't already done so. Also very good to get set up for direct deposit because that's going to see money hit your account faster. They expect to have their online portal for applications up sometime in mid-April. And the challenge on this one is that payments are probably not going to hit accounts for at least 4 to 5 weeks, and that might be even a bit optimistic. So as you do your cash flow projections, this is all very exciting news, but it's important to be realistic about when money might hit your account. Another piece on this one, just to keep in mind, is that you're going to have to make your payroll based on our current understanding and then subsequently apply to have the subsidy returned to you. So from a cash flow standpoint, that might be important. And you're going to have to qualify each month. So each month there is going to be some kind of process to demonstrate that your revenues are down and you qualify. Originally, there was also some concerns for business owners that don't take salary in traditional ways, whether it be dividends, et cetera. And there's been some relaxation of those standards to contemplate those types of arrangements as well. So that's encouraging. Now, there's a lot of details left to be worked out in that this is not yet approved. So the original bill that was passed by Parliament to provide some relief for business didn't contemplate this subsidy. So Parliament is working on getting themselves reconvened to approve a new bill. And through the debate process, there's some details that have emerged yesterday that may or may not come to pass that were somewhat encouraging. And I'll share those with you really quickly. There's currently some discussion that the March revenue drop criteria will be relaxed from 30% to 15%. So nothing for sure so far, but that's in response to a lot of businesses that said, hey, this big crisis didn't really hit us fully until mid-March, so it's going to be difficult for us to show a 30% reduction. So potential for a 15% revenue drop in March, still 30 for April and May. We now know that to qualify for this, it seems that you're going to have to apply before October of 2020. So if you do have some cash on hand and you're not immediately worried about applying or qualifying for this, it sort of seems that you'll be able to apply later in the year and retrospectively qualify, retroactively qualify. There could be taxation implications around this money and how it's treated as revenue or income coming into your business. So that's kind of important. And then there's a new development that's also on the table, and again, not approved, but one of the rumors coming out of the deliberations around this emergency bill is that for businesses that can't demonstrate the revenue drop from March. So let's say you weren't in business yet last March. Let's say that this March, your revenues are definitely down from your projections, but your business grew a lot during the year. And so relative to last year, you're actually looking better from a revenue standpoint. But of course, now you have much higher wage costs and a bigger staff than you would have had a year ago. They're considering making the option available to use January or February of this year as a revenue reference point for those businesses. So that's something to be encouraged by. The other piece is the, excuse me, I'm moving too far ahead, the temporary small business wage subsidy. which was the originally announced wage subsidy. And when the 75% Canada emergency wage subsidy was announced, I think a lot of people thought that it was intended to replace that original 10% subsidy. And what we've since learned is that that's not the case. The 10% subsidy is still on the table. Now, this is a 10% wage subsidy for qualified small businesses, which typically are Canadian-controlled private corporations with less than $15 million in taxable capital employed in Canada. Typically, if you qualify for the small business deduction, you're probably in that sphere of businesses that would qualify. Unlike the emergency wage subsidy, which is a CRA-based application and apply and be reimbursed sort of a program model, at least proposed to be that, this one is a payroll-based model. So in this case, if you qualify, which doesn't require any demonstration of a revenue loss, you simply remit a lesser amount on your payroll than you would have otherwise, and that's how you get your 10%. So it's a source subsidy in the sense that you don't have to make payroll in advance and then apply to have it back. You simply don't remit that 10% to the government. Now, most automated pay companies, CoWork, Meridian, et cetera, have actually built this into their platforms already, and this would have been available for most people as of their last pay cycle. The important thing here is the individual employee qualification limits are lower than what's being proposed for the Canada Emergency Wage Subsidy, and there's a maximum $25,000 per business limit to this one. And again, it's relevant for March, April, and May. Another one that's just important to note is there's been a fairly significant expansion of the terms around the employment insurance work share program. And this is another, it's not a wage subsidy per se, but it's intended to provide better flexibility to businesses that have been impacted. It's a program that already exists, and it essentially allows you to perform a partial layoff of your staff, and not partial in the sense that you let go a section of your workforce, but instead you would go to individual employees and you'd lay them off partially. So they might work in your business 70% of the time and be laid off 30% of the time. And essentially what this allows is, without a 30-day waiting period for EI, it allows those folks to continue to earn money from you and be employed from you on a reduced basis, and also be topped up or supported to the extent that they qualify by the EI program on sort of a pro rata basis. So this has all been sort of streamlined. The application process, I understand, has been streamlined, and also the maximum period of these agreements has been extended. So I believe now up to 72 weeks is the current standard for how long you can have this type of arrangement in your business. So some important things to be aware of if you're a business like many out there that's really doing your best to keep all of your folks employed, or bring some of the folks that you may have laid off back now that some of these wage subsidies have been announced. Now, in addition to some of the new developments, I just wanted to make sure that folks are making sure they're aware of all of the options that are out there in terms of their relief. And we're not going to go through them all in detail, but just want to make sure that people are aware of them. And as I mentioned earlier, there's some great resources out there. Canada's economic response to COVID-19 on the federal government's website is a great place for information. Economic Development Regina, as I said, through their website, is trying to bring that federal information in along with what's going on at the provincial and municipal levels. And those are great resources to make sure you're aware of everything, as well as a lot of things we won't be covering today, which are some of the individual relief programs available to folks who may have found themselves laid off, or sole proprietors or freelancers who might be eligible for things like the Canada Emergency Response Benefit that's currently underway. So there's been tax filing and payment relief. So there's been relaxations of filing deadlines, which takes the heat off folks. And more importantly, there's been a relaxation of when balances due will be owed. There's been the establishment of a provincial business response team. And the number for that response team, I'll just share with you right now, is 1-844-800-8688. And you can also get them at supportforbusiness@gov.sk.ca. And those folks are a bunch of provincial government employees that are now tasked with helping businesses navigate and access the various programs that are available. And we've been encouraged that some of the folks that we know that have made use of that service have said it's been quite helpful. So certainly something to think about. There's also utility payment deferrals being made available through the provincial government. Many of the banks have started offering mortgage deferrals. It's one caution we want business owners to be aware of when we talk about deferrals is obviously those amounts continue to be due. In the case of mortgage deferrals, most banks are taking the view that your interest will continue to accrue, and therefore the balance owing on your mortgage will accumulate or grow during the period of the deferral. So it's just important when you're contemplating your cash strategy as you emerge from this crisis, that you recognize that those payments will be coming due and those balances might increase. They're indicating on mortgage deferrals that they don't intend to have any adverse impact on your credit rating, but it's important to consider that your credit rating is in fact governed to some extent by the balance owing on your accounts. And if those were to rise somewhat, it could have a nominal impact. There's been a variety of temporary changes made to employment regulations, both at the federal and provincial level, that change the notice periods and the requirements around layoffs, et cetera. Most of the folks that have had to go through layoffs have sadly already gone through that process. It's something to make yourself aware of. At the municipal level, there's been deferrals of the water sewer utility payments, as well as some property tax deferrals for business owners. I mentioned earlier the Canada Emergency Response Benefit. Applications for that started this week. That's the individual benefit for folks that find themselves unable to work for a variety of circumstances arising from COVID-19. An interesting point on that is because of the huge amount of applications that are being seen, they're doing it by birth month in terms of application. So consult the website to see if your birth month is in the current wave of folks that are eligible to apply. There's also been an enhanced child care benefit that's been arranged. There's some student loan relief out there. And lastly, there's been some relaxations to mandatory RRSP withdrawals and registered retirement account withdrawals to provide people some more flexibility if their portfolio has been hit particularly hard. Now, one other thing I wanted to mention is some of you might have seen there's been some chatter over the last little while around what the provincial government might do. And there was some news yesterday and some hopeful comments from Jeremy Harrison, one of the cabinet ministers from the provincial government, around a grant program or some sort of small business relief program, particularly aimed at businesses that had been adversely impacted by the government's rules or what the government has asked them to do. So presumably this would mean businesses that have had to close their doors or have seen significant revenue cutbacks as a result of actions the government has asked them to take. Minister Harrison indicated that it might be a bit like what's been proposed in Nova Scotia, which was a $20 million grant program. He indicated that in Saskatchewan, it could be around the $50 million mark, which is encouraging because they want to, in his words, capture as many businesses that are affected as possible. And it's looking like this would be some sort of $4,000-ish, details to be determined grant that would be available to those folks that are hurt by those implications or those challenges that the government has asked of us. Again, very few details, but something to definitely keep a bead on. Saskatchewan.ca, the government's website, the Economic Development Regina website, I'm sure, as well as the news media is probably going to be following that one closely. So something to watch out for. I'm just noting there's been just a couple questions about the relief programs. I'll see if I can answer them before we turn it over to the panel discussion. It's a question around whether or not both businesses or whether or not businesses are able to utilize both wage subsidy benefits. That's actually quite unclear right now. The finance minister was asked that question directly following a press conference not long ago and sort of provided a non-answer. I'm hesitant to speculate, but I would suggest that it's likely one or the other. And certainly the qualifying criteria for the 75% in terms of the wages covered is going to be a bit more aggressive, so probably your best bet. What I would say from an advice standpoint, if I can go that far, is that if you're a qualifying small business, make sure that you're already taking advantage of the 10%, because 75% is very likely to become real soon, and all those details that will help answer that question will emerge pretty quickly. The challenge is none of it's set in law yet, and so it's very difficult to know for sure what the rules are going to be, whereas the 10% was approved in the initial bill, and you can access that today. So if you haven't done that yet, and you believe you qualify, talk to your accountant, talk to your payroll professional, get that happening, because it's going to be cash in your jeans right away. The other question was from someone who pays themselves in dividends when they're able to, and therefore their payroll is less than $50,000 to qualify. And the question is, are they going to potentially include those dividends and consider them to be salary in calculating that $50,000 to $1 million salary requirement to qualify for the 75% Canada Emergency Wage Subsidy? Now, unfortunately, this is another question where the specific details are not yet available to answer it definitively. And this speaks to those rumors that emerged from the deliberations between the government and the opposition parties yesterday around allowing some of those things like dividends or business owners or folks that maybe don't qualify in a broad sense to access the subsidy. We are hopeful, based on what we're hearing, that the government is going to take a qualify as many people as possible and sort out some of the particulars down the line view of this. And we're also quite hopeful that based on the announcement that some things like dividends will be qualifying for things like CERB and other programs, that they'll probably take a fairly positive view of that. But again, those details will only emerge when the programs are sorted out in detail. I might ask Craig, who's one of our panelists that I'll introduce in a moment, if he wanted to add anything to those questions.
Yeah, on the wage subsidies, you cannot get both of them, but the plan right now is to get the 10% if you're eligible, and then down the road, if you are eligible for the 75%, they'll just reduce your 75% benefit by the amount you've already received. So as you mentioned, Jeff, definitely go ahead and claim the 10%, and then if you can get the 75%, you'll sort it out later. The CERB benefit, they've just announced on Monday morning, without much fanfare, that they're going to let dividends, non-eligible dividends, be included in that calculation. And that one, you needed at least $5,000 of wage income in the past year or self-employment income in the past year to qualify. And so that ruled out people that took only dividends from their companies. So non-eligible dividends are dividends paid out of, normally it's a small business that has less than $500,000 of income. So certain structures may require you to have eligible dividends taken out of your company. So you still may need to manage that and take a wage out, let's say, if you want to qualify for that, if you meet the 14-day test, et cetera. So yeah, that's my 2 cents there. Oh, I guess I should say, on the question regarding will the dividends be applied to the qualifying for the $40,000 loan or for the 75%, as you said, Jeff, I just want to reinforce, it's too early to say. The $40,000 loan is actually, it doesn't seem likely, but it's possible. And same with the wage subsidy, it doesn't seem likely, but it's possible. They've done a good job of evolving the things as they go. The CERB was initially very much more restricted than it was. First, it was only allowed to corporations, and then they extended it in the legislation to partnerships and individuals. And then they also kept it to wages at the start, and then it evolved it to dividends. So our hope will be that even though they've announced programs that are restrictive, it's, as you say, Jeff, they're trying to get more people into it than less people into it. And it's just that they're trying to roll it out, and there's a lot of details to work through. So they're doing the best they can, it seems.
Craig, well, we've got you on the line here providing some of that great free accounting wisdom. There was 2 follow-up questions. And I might just ask for the folks that are sharing questions in the chat, if they're able to use that QA function. That's just going to make my life as your moderator a little bit easier. But Craig, there was a question just around whether or not that 75% wage subsidy would contemplate contract employees, so people in a sort of a non-traditional employee relationship.
Yeah, nothing is currently disclosed, by what it's basically a press release so far. There's nothing in legislation, as you pointed out, Jeff. So nothing right now is talking about contract employees, unfortunately. The hope would be that yes, it does include that, but for now it does not.
Thanks, Craig. And so with that, we're actually going to move into introducing our folks. And you just met one of them, but we'll give him a proper introduction in just a moment. And I'm just going to quickly unmute our panelists so they can all respond to us as we do our introductions. So panelists, you're now free to talk. Mitch, you must have you muted on your side. There you go. Everybody's free to talk. So our first panelist that I'd like to introduce is Mitch Molnar from Mitchell Developments. Mitch has got a diverse holdings, property owner, downtown office space, retail, warehouse. He's worked very diligently through a variety of scenarios, and he's been approaching a lot of his conversations, I know, with very open and fair conversations, trying to help people work through this and come to some solutions that make sense from a tenant landlord sort of perspective. One thing I've always appreciated about Mitch, real straight shooter, so I expect he'll give us the facts today, and it's a great opportunity to bounce some questions off of a major commercial property owner if you're dealing with some challenges around your lease. So Mitch, thanks for joining us this morning and welcome.
Thanks, Jeffrey.
Then we have our friend Craig Reed, who you just met earlier. Craig's a partner at Vertus Group in Regina with almost 20 years experience, even though his youthful good looks don't suggest he's been at it that long. Works with a lot of private business clients, has a focus on restaurants, professionals, and construction businesses. So a warm welcome to you, Craig.
Yes, thanks very much for having me, Jeff. It's a pleasure to be a part of this.
Thank you. You say that now, you haven't fielded all the hard questions. Well, I guess you've started. We're also joined today by Cary Wessel. He's an associate with Gerrand, Rath, Johnson, a law firm based here in the city in the business law group. Advises on corporate matters, real estate, finance, securities, private equity, and mergers and acquisitions, and has a lot of experience both in private practice and as counsel in the construction industry. So welcome, Cary.
Thank you. Happy to be here.
Excellent. We're also joined by Eric Sears, Senior Vice President at M&P Debt in the Insolvency and Corporate Recovery Group. He's worked in a wide range of industries, including construction, manufacturing, forestry, oil and gas, and hospitality. And I believe, if I'm correct, that Eric's joining us from Edmonton this morning. Is that accurate?
Hi, Jeff. Yeah, that's accurate. I'm joining you from Edmonton, but I've got roots in Saskatchewan, so they allowed me to be on the call.
I'm glad that you got through the screening process. Thanks for joining us, Eric.
You bet.
And we're also joined by Rick Smith, who's the Senior Vice President at Henderson Insurance. Rick recently celebrated 40 years in the insurance industry. He's got great expertise in understanding people's needs and what they want, trust and security, and translating that into effective insurance solutions. And he'll be able to answer all your questions about risk and navigating the insurance world today. So good morning, Rick, and thank you for joining us.
Good morning. Thank you and welcome all.
And finally, we have myself, Jeff Boutilier, President of Ascent Strategy, here to help stick, handle, and moderate and answer any questions about managing and planning through this that might crop up. And so with that, with any luck, we've stopped the screen share and we are going to start into a panel discussion. So again, as we go through the panel discussions here, I'd like people to start submitting their questions for the panel about their own business situations or things that have been on their mind, points they'd like to clarify using the Q&A function. That's going to be your best bet. I'd encourage you to start submitting those now. We'll keep the conversation with the panelists going as long as we have questions to answer. Just a reminder that we have some great representation from the legal perspective, the accounting perspective, large commercial property owner and landlord, an insurance expert. We have a debt insolvency expert and some management perspective today. So a wide range of folks to answer the questions about the matters that you're confronting right now. And to get us kicked off, I have a few questions based on some of the things we've been hearing from our clients and our friends and people that submitted questions ahead of the session. And I'm going to open with a question for you, Mitch. There's been a lot of action around wage subsidies. We just talked about that this morning. But we also know that a lot of business owners are really worried about their fixed costs right now, particularly leases. As a property owner, can you share with us how you're approaching some of those conversations and what you're looking for from business owners when they approach you about their lease, looking for some flexibility or for some relief?
Sure. Thanks, Jeff. I guess firstly, I think that some tenants are afraid to talk to their landlords. Please reach out and talk to your landlord. Many landlords have hundreds of tenants, and they're not sure of what your needs are. And those that I've talked to are triaging tenants that come forward first. Most of them are not doing a blanket approach saying that we're going to do this for everybody, because everybody's needs are different. So first off is talk to your landlord, and you need to be very frank with them. A lot of landlords don't understand what your business is. They, on a day-to-day basis, they may know that you are in the business of a restaurant, or you might have an office that ultimately appears to be an office, but maybe has some sort of transactional nature on a daily basis that you're dependent upon for revenue. So talk to your landlord and make them, try to have some good conversations and let them understand about how your business actually operates. And most of the time, I think, out of all of my industry friends that we've been having discussions about, your landlord wants you to succeed. Some of the big landlords, the multinational guys, might be making different clucking noises, but that percentage of their tenants that are retail in nature to first off this first month, and then I'm sure that the stress will grow as the months that were isolated continue on to different factors of the economy, warehousing, and then perhaps some smaller office users. They want, everybody wants you to be there on the other side of this. So, and your landlord does have some opportunities to provide relief. we upon application can get relief from our banks, and I think a lot of landlords are prepared to kick the can down the road in order to provide the tenant some relief. I think that the important thing would be if you can pay your operating costs, that would be great. Most landlords would like to see that. I think that is there something you can give your landlord back? You might be saying that that I can't pay my rent while I'm mandated to be closed, but I would like to reciprocate with a longer lease term. I'm able to amortize some of the foregone operating costs or rental over the remaining term of my lease. Can we do an early extension of my lease if you have some confidence that you're going to be around for a while? So there's a variety of things that that your landlord has available as solutions, but I think the most important thing is just to have some honest and frank conversations. And most landlords, it's far better for them to work with an existing tenant and to see you through this difficult period than it is to see you fail and for them to have to go and try to re-tenant the space. The numbers would dictate that that is the sounder game plan from their perspective.
That's an encouraging perspective, and I wanted to, while I have you on the line here, there's a follow-up question I think is quite relevant, Mitch, which was a question around, is there really a general consensus out there yet on what people should be expecting landlords to offer in terms of solutions? This particular gentleman has 2 locations and he's facing vastly different options, one of which sounds pretty good, the other maybe not so much. So curious if there's a standard emerging or something that most people can expect.
Follow up. You may not know this, Jeff, but I assume it's a retail nature.
Actually, I think it's a service business operating out of a street front type location, that sort of thing. Healthcare.
Okay. All right. So basically, pretty much shut down then. Mandated to shut down. I would think that a reasonable landlord would say that your net rent would be deferred to be paid. Hopefully interest-free at some point in time over the remaining term of your lease, amortized and spread out over the remainder of your lease. Certainly the operating costs, they're going to want to see that get paid. They're just kicking that down the road until some point in time. I am hoping that the provincial and municipal governments will come up with a reasonable payment program for utilities and property tax deferrals, and not over a course of months, but over a course of perhaps 2 or 3 years. I think that there'll be a big cash crunch if they try to collect all of those at once. I think the city of Regina has offered property tax deferrals until October 1st, but I don't think that anybody in their right mind would expect that everybody on October 1st is all of a sudden going to pay their property taxes. So I think they're going to have to deal with that, and I've been trying to have some advocacy with the provincial government towards that. A landlord who is completely ignoring you might be just not thinking straight, to tell you the truth. I don't know what their game plan would be, but I think that if you approach them with a net rent deferral, that would be one thing. And if that doesn't get you over the hurdle, I think a month-by-month sort of gross rent deferral. I know that I think we're going to have a conversation about force majeures a little bit later on. Your landlord may point to the fact that although business is interrupted through a force majeure event, which would be the pandemic crisis, I believe that your lease would probably have other statements that at any rate that doesn't stop you from being required to pay your rent. Which is at the end of the day, that's true. And I would hope that your relationships wouldn't get to the point where you just don't pay your rent and you worry about it later. I don't think any landlord in their right mind would pursue you for an eviction for 1 or 2 months of missed rent. So,
excellent. Thanks, Mitch. And great segue into the force majeure question, which was one I was going to direct to our legal expert, Cary. So, Cary, I mean, right now, a lot of us sign contracts in business all the time, and we review them, obviously, but we perhaps don't spend a whole lot of time worrying about force majeure or act of God provisions that are often included in those agreements. A lot of folks now, as Mitch mentioned, find themselves in these weird circumstances and are wondering if those things are going to be in effect, particularly folks that are worried about obligations they might have under contracts that they're no longer able to fulfill. How should businesses approach looking at those contracts and approaching that sort of challenge?
So Jeff, the first thing you mentioned, and you mentioned several things in one go there, is that force majeure is referred to some people, by some people, as act of God, and it is essentially the same thing. And also it has to be inside a written contract. So there's no statutory source for force majeure or common law source. It's definitely something that has to be in a contract, which means your contracts have to be written. The other thing is, subjectively, you have to look at the wording of the force majeure clause itself and also with the contract as a whole. So for force majeure, there are two steps. One is that the event is completely unforeseeable, which in this case I do believe qualifies, because you might have certain business hardships or something, but in terms of something being completely shut down, like borders and isolation orders, this is very, very far out of the norm. So I think it qualifies for that step. The second step is, does it make your contractual obligation completely impossible? So it's not enough to simply have hardship. It would have to make your obligation under the contract completely impossible for you to do. So some examples, I guess, given before, rent would be one. For one thing, currently, at least on the residential side, the Office of Residential Tenancies has prevented evictions. But if you were to take a case where, say, somebody is locked out of their building for 10 days because of an isolation order on the building itself, you're really only, the landlord might be preventing you to come back in for, say, 10 days, something like that. That's not making the total contract impossible. For example, on a 1 year or 2 year lease, being locked out for a certain period of time is not actually something that a force majeure would come in and save the tenant from paying rent. Of course, there are other things coming down the pipe. The inability to evict tenants has come down right from cabinet, so that's pretty straightforward. But the force majeure itself, you really have to look at subjectively to your situation and whether or not it makes your obligations completely impossible.
Thanks, Cary. And Cary, perhaps for you, perhaps for Mitch, a couple questions coming in on the legal aspects of leases right now. The first was a question around force majeure versus quiet enjoyment clauses in leases. This question says, a lot of the talk is around the superior force clause and contract frustration, but how does quiet enjoyment fit into this? Since non-essential services have had to close, the landlord's been mandated to close doors, which would presumably be against the quiet enjoyment clause. Which of those two clauses is more important? Anybody want to take a stab at that?
You have the most quiet enjoyment you've ever had right now. You have to remember that, first of all, the landlords are not locking the doors. It's mandated that the tenants close. I have not taken any keys away from anybody. I have, it's business as usual, and I've got my building operators, the heat's on, security is there, all those sorts of things are still operational. It's government mandated to each individual tenant. So I would argue that the quiet enjoyment is irrelevant. Quiet enjoyment in my mind means that your neighbor is undergoing renovations and you can't possibly do the work. So that's a whole different issue. And Cary, I'm sorry if I'm intruding upon your ground here, but I believe in each tenancy would have a unique, or each landlord has specific tenant clauses in their leases that would really dictate how the force majeures work. And I've always considered them to be, and I think Cary referenced this a little bit earlier, is that it's a period of time where in essence, the responsibilities of each party may be suspended. But I don't think that at any point in time, the lease could be considered void, or that other aspects of the lease document would take precedence, such as the requirement of the landlord to, provide the building if possible, unless there was some sort of physical damage to it, or on the tenant's aspect, that they are still required to meet their payment obligations.
Yeah, I'd agree with you on both counts there, Mitch.
Thanks, gentlemen. Another question just on that topic we'll address while we're on the subject is a question around, would it be appropriate to discuss with your landlord adding a personal guarantee to a long-term lease? Or actually, excuse me, rather discussing the personal guarantee on your long-term lease and including limiting it or even waiving it under these circumstances. Is that something that landlords would consider, Mitch?
Well, is that something they're offering up as a benefit to the landlord? I'm not sure. I have, let's say for argument's sake, I have 100 tenants. I have 0 personal guarantees on any of those tenancies. And maybe because I'm still locally based, I'm not a national tenant or a national landlord. I have no desire through this process or any other process for that matter to come and have a personal guarantee. And if your business fails, that I am coming to your house or taking your car or taking your house or your dog or anything like that. So I think that all people acting reasonably and knowing where this market is, I don't think that a tenant should have to offer a personal guarantee to a landlord at this point in time. I think it would be something that would show a great amount of dedication to your business and to your lease space if you did that. But I really think that if somebody came to me and had a failing business and said, I'll personally guarantee it, work with me, I'd say, I'm going to work with you. Don't personally guarantee it. Like I would seriously consult them not to do that.
Thanks, Mitch. All right, a question here for Eric joining us from Edmonton at MNP. Eric, I hate to take things in a darker direction, but one of the questions we've been getting a lot from businesses out there that are stressed out right now and worried about their cash flow is that they're worried they might not survive this. They're worried that they might become insolvent before they get to the finish line and things get back to normal. So we thought it was pretty important today to give folks a sense of, how bad in Canada really is the worst case scenario going through a commercial bankruptcy or even a personal bankruptcy, and what would those folks be facing and what help might be out there for them.
Sure, Jeff. Yeah. Certainly bankruptcy has a dark connotation to it. No business owner or individual wants to think about that road or what that path looks like. But in times like this, it's probably good for business owners to view bankruptcy or restructuring or anything of that nature as a tool and an option available to them if they need it. Bankruptcy of a company in Canada is actually a pretty simple process to initiate. It's done either by the directors, a majority of the directors agreeing to it through a resolution and some other paperwork through a licensed trustee, or a creditor bringing an action through court. And most bankruptcies are debtor-driven or management or director-driven. If the creditors themselves are getting involved to initiate a process, it's typically a receivership driven by a bank. Both processes unwind similarly, but the bankruptcy itself for a company is really a mechanism to liquidate the assets and then distribute the proceeds to the creditors based on priorities that have already been set. So it's meant to be a transparent process where the creditors can see what's happened with the assets, what monies are available, and who those monies have been distributed to. What it does, although it doesn't seem like it, and it certainly doesn't have the impression to the general public, but it answers a lot of questions and avoids a lot of speculation on what's happened with the assets of the business and who's been paid. If a business is wound down in the absence of a bankruptcy, let's say, and if there isn't enough money there to pay all the creditors in full, regardless of how genuine the owner of the business was in terms of distributing those monies, there's always going to be questions, right? The bankruptcy process allows for everyone to see those monies in and out and who got paid. And again, who gets paid is typically predetermined either by legislation or who's got security over what assets or whatever the case may be. A bankruptcy is a good tool when owners of a business know that there isn't a viable business there anymore, that the end is coming, and the right option here is a liquidation, and there isn't going to be enough money to pay all the creditors in full. It's an efficient way to do that. It also allows for things like there's a Wage Earner Protection Program Act in Canada. It's a federal statute that gets administered to pay employees things like termination pay, vacation pay, and wages that they might be owed up to a certain amount. It also allows a mechanism to deal with landlords who then at least know what the process is, and there's a process for them in that as well. So it can be beneficial if the outcome of that business is known to all parties, at least known to the owners, and just trying to find a way to wind down and distribute.
I know, Eric, just as a follow-up, that a lot of businesses right now are working through the process of trying to understand when the cash might run out, and we'll talk with Craig a little bit about that in a moment. But just if a business starts to come to the realization that if this stretches on even for another month or two, that they're not going to make it, is it better to kick off those conversations with someone like yourself sooner than later, or should they still just make the best go of it they can and only reach out once they're sort of shutting the lights off, so to speak?
Like anything, the earlier you have the conversation, the better. And certainly having a conversation with an insolvency professional isn't committing a company or an individual to anything. But what it does is provide you with information to understand if you're in a position where you believe the company may be insolvent. Right from that position forward, what can I do? Who can I pay? What can I do with the assets of the business? Those type of questions. You can get advice on that. I certainly would echo anyone that's going to say that putting together a cash flow projection is of use. We make that comment all the time to help business owners understand what position they're in and what position they're going to be in. But having a conversation up front with an insolvency professional also allows you to do some planning. Even if you see a bankruptcy as a good tool go forward and it's a month out, there's a lot that can be done in the month leading up to that. That can actually position the company better for an insolvency process and maximize the realizations for the creditors better once it's an issue.
Thank you. So moving to a bit of a different take on some of these risk questions, I have a question for you, Rick. You know, one of the questions that we've heard from a few folks, and we don't get a lot of questions on the insurance side in our normal course of business, but a lot of people now find themselves with businesses that are typically occupied every single day. A lot of the hospitality businesses, the service businesses, retail, that sort of thing. Those are usually full of people all day, and employees are always there attending the shop. And now they're sitting idle as a result of some of these government restrictions and closures. And so some folks are a little bit worried, I suppose, whether or not they need to be looking at their existing coverages and if they're still protected if people aren't routinely attending their shops. And I was wondering if you could comment on that.
Sure, I can comment. One of the things that's quite important, there's vacancy and occupancy clauses within all insurance policies within Canada. Those in particular vary by insurance companies. It's a simple matter of just advising the broker of what's going on. Most of the insurers are waiving a lot of these requirements within the policy, but they're there. My advice is, don't just assume, just notify your broker and tell them that you're shut down, doors are locked, nobody's in there. You want to make sure that the vacancy clause are not going to be something that's going to show up if you have a fire or vandalism or any of that type of stuff, water, sewer losses, any of the weather-related losses that may show up in the next little while. So that clause in particular, just get clarification. What we've had certainly through our office is a lot of flexibility with the insurers. They are not going to press those issues. I'd be shocked if they would, but they're there. So just get clarification. It's a simple email. Just get clarification on it. Make sure that those clauses aren't going to be an issue. So as it relates to not operating or any of that type of stuff, talking a bit about the coverages themselves and what the industry is working very diligently on. There's an ability to go back to underwriters today and deal with things like inventory. We'll take the hospitality business. They may not have all the liquor, all of the food stuffs in their buildings at this point in time. They're shut down. So why would they have any of that type of stuff? they're paying insurance on all of that type of stuff. There is relief within the underwriters to just go back and say, hey, we don't have this stuff. Let's get it off our policy temporarily. Underwriters are being very good about managing that in term. Generally, they wait to the year end to deal with that, but they are given relief right now. The other thing that's in fact does impact on your insurance premium is sales on activities. Liquor sales, as an example, in the hospitality business is much highly rated than food sales or meal sales. So, you know, you can modify those, and a lot of underwriters are accepting requests to modify those, which can give you relief premium wise. Autos are another example. You can suspend autos, cover them, and just have the autos sitting there without either a license plate from SGI, which saves you some dollars, and just insure it while in storage. Substantially less in premium in order to do that. Should take a look at it. There's an awful lot of coverages, side coverages, transit, crime, employees' tools that you know, you can talk to your brokers and make a decision whether they're really necessary in the short term, because all of those have a premium attached to it, and there may be relief from a dollar standpoint to manage that and modify your insurance policy to deal with each one of those issues. So
excellent. So some additional opportunities for folks looking to lower their cash outflows that might not be immediately on folks' radar. So excellent.
Yeah. The one other thing as well, a lot of the premium finance companies that are coming out are offering deferrals. So if it's a case-by-case basis, if you are on a monthly payment basis, you can go back to either the underwriter if they're financing it, or the finance company and request a deferral for a number of months. They are accepting those on a case-by-case basis. You need some explanations, but you can work with your brokers to get that, to give you the short-term cash flow relief that may be necessary. So don't just, you need to talk, you need to have a good plan, and on a case-by-case basis, they're being pretty flexible at this point.
Just a quick follow-up that came in while you were speaking there, Rick. Someone asked if they're storing goods off-site right now, do they need to add that second location to their policy?
Has that been well, there's a lot of questions that come around storage offsite. If the storage offsite is a permanent location, generally yes, because it's listed locations where the coverage applies. But if you have to store goods offsite because we'll just take a mechanical contractor that had them all stuck in vans, and they decided to take them out of the vans and put them in a storage location, you can add that location on there. It's a heck of a lot cheaper to put the coverage on a secondary location than it is to put it in vans. They carry a much higher premium on the mobile equipment stuff. So yes, but each individual broker can manage those on an ongoing basis. Most of the policy will have temporary storage locations coverage within there to a certain level. 30 days, 90 days is quite common within the package, but they're temporary storage locations. They're ones that started from one point to the next point, but they're limited. Easiest thing is just to let the broker know what you're doing, and then they can manage the costing of it and what needs to be done based upon your individual circumstances.
So definitely something people want to be talking to their broker about and making sure they have the right coverage.
Yeah, we're fending a lot of those conversations today with virtually every commercial client we have right now.
Excellent. Craig, question for you. You got to start us off with the questions before we even hit the panel discussion, and we hinted at this earlier, but we know that cash flow we've been talking about with our clients all the time, and it's traditionally been a bit difficult to get small business owners to really get on top of their cash flow. And wouldn't you know it, a crisis hits, and all of a sudden, cash flow is the conversation right now. And we've never seen more interest in some of those dark arts. And I'm curious, when you're working with your clients and when you're trying to coach them through this, what are some of the things that you're telling them they should be looking for as they aim to figure out their inflows and outflows for the next little while and project out how they might get through this situation?
Yeah, I would take issue with your terming it as a dark art, Jeff, but that's fine. That's fine. A lot of our business owners will manage their cash flow based on the bank account. If there's money in the bank account, they're doing well. If they're not, if there's no money there, then boy, we got a problem. We typically do recommend doing a rolling projection of your cash flow for the next, say, 6 months or a year, and you update it each month. And it's never been more important than to do it right now. The difficulty is if you've never done it, it's going to be a little challenging, a little bit of a learning curve. And if you've been doing it so far, there's never been more uncertainty in your cash flow predictions. So the tips I would give is you can sort of start small and start easy. It doesn't have to be fancy. It doesn't have to be a big task to tackle. You start very easily, very simply by using, say, the basis of your income statement, and take your income statement and adjust it for non-cash items, things that aren't actually going to hit your account. So for example, if you've got amortization expense in your income statement, well, that's a non-cash item and you got to remove that. If you've got some revenue in there that you know that this customer's not going to pay you for 6 months because they're a restaurant and they've shut their doors and they've already talked to you about that, then you got to remove that from your revenue. But the income statement's always a good basis to start from, and then you can adjust it from there. I would recommend in this case to do what's called sensitivity analysis, with just fancy words to say, do your best case scenario, your worst case scenario, and somewhere in between, because it's going to help frame decisions for you. The other thing we have right now is, for example, the 75% wage subsidy. There's still a lot of uncertainty over whether we would qualify for that for most businesses. And there's good signs for that. But as you pointed out at the outset, Jeff, that cash flow is still probably 6 weeks out from your bank account. So even if it might make sense, do you have the funds to pay the payroll and then wait for the money? That could be a limiting factor for you. And as much as we want to help our employees out and keep them employed, if you're paying them 25% of their normal wage, essentially is your net cost, but they're not really doing 25% of the work, it still may not make sense. So I think the difficulty here is each different scenario you're trying to decide upon requires its own projection. So the big thing I would say is too, if you've got a business that runs on receivables where you do the work and then customers pay you a little bit later, like professional services, even just an auto repair shop sometimes has that with large fleets. Anything you can just make sure that your collections are tightened up is going to be important. Anything you can defer on payables that you mentioned at the outside, the outset, the government programs are deferred for GST, PST, corporate tax, personal tax, all that stuff, just put it off as much as you can. Mitch made some good points about how you can structure it with your landlord so that your rent is a little bit more manageable. So anything you can do to defer right now, we want to do. I know banks are offering also lease deferrals too, which I don't know if was mentioned, but large equipment leases will also maybe get a 6-month deferral option. So it doesn't have to be the Mona Lisa of cash flow projections to help you frame your decisions. And just start small, and then certainly consult your accountant or professional advisor if you need to just refine it, because it can take a lot of time, and a lot of that is stuff that you know about your own business. So and your accountant may not know. So it's always best to take a stab at it and then refine it, as opposed to ask your accountant to just start from scratch in most cases.
Thanks, Craig. And actually some follow-ups coming in, because you know how it always goes. The accountant is always the most popular guy at the party. And that certainly seems true this morning. Question from someone out there who I think is a sole proprietor, a one-man show, so to speak. I wonder if you can comment on what the best programs that they are out there right now that they should be looking at to help out a sole proprietor, one-man show type of operation that might be facing a business decline. And welcome anybody else to chime in on that one as well.
Yeah, the difficult part is that the government programs for assistance right now do not focus on sole proprietors that aren't paying wages. So the wage subsidies don't apply. The small business loan, like the $40,000 loan, also doesn't apply because you haven't paid wages. So it's really challenging. The CERB benefit that's subject to $2,000 a month may not cover your bills, but that's the best case item right now from a support program from the government. But if you're not actually closed for 14 days, then you're sort of shut out. So you would sort of fall squarely in that camp of people that are not yet covered properly by the government programming. And I know that there was a press conference today where they're announcing some further measures, which obviously we were on the call, so we don't know exactly what's going on with that. But the unfortunate part there is if you're working just say 2 days a week, or your revenues drop by 70%, but you're still working and trying to make ends meet, essentially none of these programs really yet cover you, which is challenging, obviously on a lot of fronts, very frustrating, but hopefully they're going to evolve that in a way that will actually mean some meaningful help for you.
Thanks, Craig. And actually, it's a good opportunity to point out that our friends at downtown Saskatoon indicated that they were listening in on the Trudeau press conference. And it sounds like he did confirm that the March revenue decline for the wage subsidy is going to be set at the 15%. And also that the March revenue can be compared to January and February. So it sounds like he confirmed that today. Obviously, I haven't had the chance to validate that because we're on this call, but some promising news there. Sounds like we're on the right track. One question here, and Craig, perhaps you can take a stab at it, but I know we also have lots of business owners and senior business leaders on the phone that probably deal with this. On the cash flow side, someone's asking, is there a sensitive way to reach out to customers that are sitting at 45, 60, or 90 days past due on their receivables that you're trying to collect on, and recognizing that you probably weren't as worried about those cash flows as you might be now in light of the shutdowns?
Well, I can take a stab at that to start and welcome any other comments. I think the most important part, and Mitch pointed to this too, is communication. It's not ignoring it or just approach them with an open, honest, I guess, demeanor, because you're trying to work with them, obviously. You want their business to succeed in the long run because they're your customer and they'll continue to be your customer, one would hope. And even realistic payment terms might be an option, right? Can we get half now? Can we get a quarter now? Can we get a monthly payment plan in place? And if they can't pay you, it's better to know that now, and then you'll be able to project that out and see whether that's going to be an issue for you or not. But I do think I sort of echo Mitch's comments earlier that we're all going through this crisis together, and we all want to work together to help our businesses all succeed as we go through it. So we have to work together and not be as I would say heavy-handed in our approach in terms of collections. That's my own personal feeling on it.
Anyone on the panel want to add to that? Sorry, go ahead, Mitch.
Just add one thing, Jeff. It would be, there's an old political saying, never waste a crisis. And this is a good opportunity to be able to reach out to people that you've never had an opportunity to talk to before. Be it your bankers, your lawyers, your accountants, all of your tenants, different people. Reach out to your competitors. I think that the more information and the more conversations you can have, the better off you'll be.
Excellent. Thank you. Mitch, there was a question that actually came in that I suspect is relevant to you too, in fact. One was asking if property managers are actually actively looking for any relief mechanisms from government that might support tenants, if you're involved in sort of that process. And the other one was around whether or not there's any differences that you're seeing around how national type tenants might be being treated in this situation versus locals.
Sure. I think first question first. I think that some of the programs that are being announced that clearly business's ability to deal with fixed costs. I think a lot of the programs that have been announced have been credit programs and are ultimately focused on trying to have businesses stay alive during this time period, and I don't think are really focused on trying to get a tenant to pay their landlord, which is fine. I mean, there's other mechanisms in place, and I think that the big FIs and the credit unions have done a great job of offering the relief that they can. The programs announced, I think Nova Scotia's announced a program that's very similar to the one that the provincial government announced this morning. I'm afraid to say that I don't like those programs. I think they're incredibly ineffective. $4,000, it's like a thin spread of butter. Nobody gets a taste. So I would prefer that they would use their power to work on things that are more directly in control that they can finance out. The $50 million that they're going to put out in the marketplace is just going to evaporate. Whereas if they spent their focus in saying, okay, people's real costs on fixed costs are, besides rent, the net rental portion, which goes to the landlord to help them service their capital, would be the operating cost portion, which a big component of that is property taxes and utilities. It probably comprises well over 60% of those costs. I mean, and that's right in the roundhouse of the municipal and provincial governments for them to be able to afford some sort of payment programs, if not outright grants. The provincial government, would they provide a partial grant on education taxes, the portion of the property taxes, those sorts of things. So, I mean, I think if we're going to have an effective advocacy, I would like us to focus on those aspects. And sorry, I've rambled on. I forgot the second part.
No, I appreciate those comments. I mean, one of the things that just to build on that we've been hoping to see is, as some of these programs start to come together, it'd be nice to see a connection between folks getting certain types of relief and then extending certain types of relief to others that we hope they will. You know, I think trying to build those connections between programs is going to be somewhat important. Also, it's been brought to my attention that despite the fact that I told all the panelists to make sure they were in a well-lit room, and despite the fact that we are all in the same city, I appear to be experiencing some sort of profound localized solar event that's making things very shaded. So I apologize for that. But the second question, Mitch, was whether or not there was any sort of truth to this idea that perhaps people are being treated differently if they're these big national tenants versus, you know, a local business that's just one of many tenants in a landlord's portfolio.
I think that I think that it actually matters by what sector you're in, whether or not you're retail, service, warehousing, office, those sorts of things. And I know that some national tenants that are a bit more sophisticated have tried to use the crisis as an opportunity to get out of paying some rent. Those people we've been telling, like if I'm getting a phone call from Toronto and I know that there's really nothing wrong with your business, you still have cash flow, you still have, but I guess that's incumbent upon each landlord to understand the base of their tenants' operations, how they derive their income, and I think that you can better make the assessment. But yeah, I mean, if you're a national tenant and you're in retail, you're in trouble. It doesn't matter how big you are. And if you're a local tenant in office, not to pick on the lawyers and accountants and insurance guys, most people that you guys might run into cash flow problems down the road and have to work with your people to collect the bills that you're charging right now. But in all essence, these guys are still in business. So I don't think that there's a discrimination between local and national. I think that it's a conversation. I've received requests from nationals. I've received requests from locals, and I'm adjudicating those requests based on what I think their base needs are.
Thank you. And I just want to encourage anyone who's out there on the call that's sitting on some questions. We're getting to the last few questions that have been submitted so far. We have some time left with this great panel of folks. So if there's something that you're wondering about or that you're dealing with your own business, this would be a great time to get that in using the Q&A function. One question that did come in though, and Craig, this might be in your wheelhouse, was whether or not you had any thoughts on whether or not an owner might qualify for some of these wage subsidies or wage relief programs if their remuneration has been coming in through a holding company instead of their opco. The thought here being that the holding company doesn't likely meet the eligibility requirements, but that this folks doesn't think it seems right that an owner wouldn't qualify because of their compensation structure or corporate structure that underlies their business. Can you comment on that?
Yeah, the difficulty with the programs right now is that they're relatively simple programs, and so they don't cover all the different permutations and combinations of a corporate structure. So and they sort of evaluate each entity on its own merits. So if you've got 4 companies in your group and they each meet the $50,000 wage test, then right now, as I understand it, they each would be applicable to be able to get that $40,000 a small business loan that's interest free. Whereas if you have $30,000 in 4 companies, then none of them would individually merit it, and therefore you would get none of it. So perhaps there's some further refinement coming, but at this point it's unclear. The only thing that where they're grouped together is the 10% wage subsidy is based on a corporate group. So if your corporate group combined has more than 15 million of capital, then you don't get small business deduction normally, and therefore you're outside of getting the 10% wage subsidy. That can be a problem for like a car dealership, for example, that may not necessarily have a huge amount of income or retained earnings, but their inventory is so high, and the debt related to the inventory is also part of that taxable capital coverage. So it can be an advantage to some corporate structures because each company gets its own test, and each company may be applicable to that benefit. For example, the 10% subsidy, you can get $25,000 per entity within a group. So there's certain things that are benefits to it and certain things that are problems. But yes, right now, if your holding company has a $40,000 wage to you or $40,000 dividends, then that might put you outside in some of the tests. They're not combining a corporate group as of right now, so far as I'm aware.
Excellent, thank you. And another question came in, I think, on the same vein of the financial side and some of the financial considerations people are working through, and that was around, is it worth reaching out to some of your suppliers right now and your key sort of supply chain partners and asking about whether or not they'll renegotiate payment terms or shift some of the the payment structures around inventory you might be carrying. I know we have one person that we've dealt with that made all of their orders for a seasonal business before this hit and is now stocked up for a seasonal business with inventory that reflects a normal year, and it's not going to be a normal year. Anything they should be doing with their suppliers, anything that they can do?
Is that one for me, or I'm hoping someone else can answer that one, because I don't think there's an easy answer. Realistically, it might be a process of how much can they return, how much is going to be, if it's a seasonal business, I'm thinking like an ice cream shop or something where there's going to be perishable goods. Those, geez, I don't know. Like that could be something where you're working on through to July. Now, the good news is perhaps you can do a blowout, some sort of way to, for example, some businesses are donating their extra produce in the restaurant business to like the food banks, local food banks, things like that. If you're running a seasonal business, this is though when you make your money coming through the summer months. And so this might be your only sources of income. So you're not going to be in a position to just say, we'll give it to the food bank, or we'll sell it at cost and off we go. The hope would be, I think, that your suppliers will work with you over the long run, because they want to keep selling to you in the future. And maybe there's some terms that can be worked out. I think it'll depend on each situation, will be very different. And the communication part is going to be the most important factor there. Certainly, we're not looking in our business to be back into normal sort of working together in the office until probably the end of June. And the sad fact is it might be even a little bit later. But hopefully a seasonal business can still get maybe July, August, somewhat normal. But yeah, I don't really have any better strategies than checking your return policies for those goods and working with your individual suppliers to work something out.
Yeah, and in terms of the timeline you suggested, I know that's sort of the timeline we're dealing with in our business, and I think others are hoping for the same. And some days, depending on the media cycle, it feels optimistic. Other days, it feels realistic, and we're just sort of hoping for the best. One question came in just now, I might take a stab at and then open it up to the panel, was suggestions for any local gym owners in terms of communicating with members to hang on to their memberships for the next few months while doors are closed. And this is an interesting one for us. I've had a few gym owners reach out to me personally asking questions about memberships. And I know what a lot of gyms did right off the bat is then they decided to close their doors. Some did it proactively, which I think was a really responsible move. Others waited for the government to make it necessary. But they immediately ceased drawing membership fees from folks. And I was of the view at the time that might have been a bit of a mistake or a bit premature. One of the things that's kind of challenging about a lot of these situations right now, particularly in subscription businesses, is that folks that are able to maintain a reasonably normal way of life and haven't had their disposable income rattled quite as significantly do in a lot of cases have significant loyalty towards some of these businesses they deal with, particularly their gym. And so we were of the view that perhaps it might make sense to offer a blanket significant discount, i.e., maybe we're dropping our memberships by 50% and hoping you'll stick with us so that we can get through this and be there for you when we reopen. And then obviously if people had more difficult financial circumstances, you would waive their fees or something like that. So I think, being creative and trying to sort of work with your clients and offer them some options where if they're able to stick with you, they might. You may be surprised that, for a nominal fee, they might be willing to try to bear that and do their part to keep you alive, especially if it came with some benefit to them down the line once things were back to normal. So something to think about. And I'm just curious, for businesses like that, for the panel, a lot of business owners on the call, whether it's a gym or a local restaurant or a subscription type business or a membership type business, any thoughts on what people should be doing to communicate to folks around the need to sort of stay involved in those relationships so that those businesses are there when we emerge from this?
Well, just from an anecdotal perspective, I know that the gym that I belong to and some other gyms that I'm loosely connected with have taken their business online, and it has at least allowed them to have that continued connectivity with their client base. And of course, their revenues are down, but they're still front and center, so that when things come back, hopefully those people will think of them first and come back. But I also think that, and this is just more of a general sort of Mitch sitting on the top of a mountain and thinking about things. This is a real opportunity, I think. Everybody's in the same situation, that we can all examine our business models. And I think if there's some frailties in those, you may have charged on in good times, not realizing what exactly kind of a business you've built. And I think that this is an opportunity and a chance to reset and look sort of into the deep dark core of your business and decide what it's going to look like on the other side.
Yeah, great point, and actually a good leaping off point for a suggestion that just came from the crowd, which was, is it all right if we do a small business shout out? And the question I think was, they'd love to know if the panel have seen any great pivots around from local businesses that could be held out as an example of some folks that are making the best of these challenging times. So I'm curious if anybody's, Mitch, you mentioned your gym's going online. My daughter's dance classes are all online now, and that's been a lot of fun at home. I'm curious if there's other examples that the panel wanted to share.
I think one of the things I witnessed, grandkids and stuff like that doing schooling over Zoom and those types of things are innovative. Certainly, our industry is making use of technology in a much better way in very, very difficult times. So we're doing a lot of insurance renews over Zoom, Teams, et cetera, et cetera. So technology is playing a big part of where we're going. Out the other side, there will be some major changes on how we do business for sure. And I think we're evaluating this on a day-to-day basis where, I mean, cash flow is tough for everybody, including us. We manage the same cash flows and same rents that we have for landlords in our operations, but we're still open for business and still doing some stuff, but income is down for sure.
Anyone else want to chime in on that one?
Yeah, Jeff, I can say we've had some of the local distillers pivot to manufacture hand sanitizer and market it. So it's generated a bit of a buzz for them and allowed them to continue manufacturing and provide a product that's in high demand. I'm sure it is everywhere. Restaurants as well, as Mitch mentioned, I think. A number of them have moved to a delivery service or even a curb pickup service, especially the local ones with a strong following, like you mentioned. So we've seen, certainly in the hospitality industry, a lot of pivots. They would probably be the most innovative I've seen so far.
Yeah, I think the hand sanitizer is something we've definitely seen here in Regina, and that's an awesome pivot. And another one that you reminded me of was, there's a plastics company in Regina, I can't recall the name of it offhand, that has started producing all of the plexiglass shields that are being installed at tills and grocery stores and your Walmarts and that sort of thing, which has been, I think, a nice story coming out of this. One thing I wanted to just add for people to think about is, I know there's a lot of folks out there when they're considering the different bills that they have to pay and their cash flow challenges. Some are saying, okay, well, I'm going to continue to pay the monies I'm owing to these local businesses, and these bigger companies I owe money to, maybe those are the ones I'm going to hold off on paying first. They're kind of prioritizing on that basis. And I just wanted to caution folks to just be careful about that, in the sense that local is local, I suppose, is what I would say. There's a lot of local businesses that, whether it's a restaurant that's a national chain, but those are local investors that have made local investments and are local business people employing local folks. And it's sometimes easy to, I think, mistake, a mom and pop from an equally merit-worthy local business just on the basis of the brand or who they might be affiliated with. So something just to be cautious about. One other question came in, I think it's an interesting one, is, should a small business that's considering trying to recover from COVID-19 approach it as though they were starting up again? And that's an interesting question. My initial take on that would be, no, of course not. You've made lots of great investments in building your business and your brand and relationships, and presumably you're starting out from a much stronger position than you would be if you're starting up. That said, it would seem to me that some of the things that are the hallmarks of startup businesses, being really nervous about cash and managing it very closely, being very, very prudent about new investments and bringing on new staff and growing in a responsible way would sort of be the rule of the day. But I'm curious if there was thoughts from the panel on that topic.
Well, I'll take a shot at that. Having some retail-based businesses in our portfolio, I think that quite a few of them I am going to approach when we talk about what it looks like, what their rental scheme looks like when they reopen is going to be as if they are a startup. There'll be a phase in because they will have to build up their businesses. I mean, we might slowly come out of social distancing where, you know, if you're a restaurant, maybe you can open up half your tables, those sorts of things. And I just think it would be really naive and dangerous on both the landlords and the tenants' part to think that, you know, that at the flip of a switch, everything's going to be back to normal. So we are certainly anticipating being, you know, having to work with our tenants a little bit more. But I'll tell you, it's almost like if you go on strike and you don't get that income for a period of time. So i.e. if I have a vacancy for a period of time, that money I will never get back. So it's far better to work with a tenant and see them come back and be a healthy long-term tenant than it is for me to make some sort of draconian decisions about I want my money now.
Mm-hmm. Yeah, very good points. Anybody else want to chime in on that?
Yeah, I think Mitch's point is very valid. Like, as I work with a lot of restaurants, the concern there is, will they get through this period with no cash, no revenue, whether they're trying to do takeout or shut down completely? It's a very uncertain time. But what's really more concerning to them is Mitch's point about the recovery period. And are people going to be out in social distancing? Will they still keep 50% of the table? Like, if you can only do 50% of your old business, then maybe your business doesn't work anymore. That's unfortunately maybe going to see Eric at that point. But construction is still trying to keep going, and they're used to safety protocols on the job sites anyway, and so they're keeping the job sites going as much as they're able to, which is a good thing. And so long as they do it safely, as I'm sure they are all doing, I think is to your earlier points, Jeff, it is just prudent to manage cash flow, do it every week, do it by the day if you need to, do more stuff yourself as a business owner that to take on less risk that you would have otherwise done. Be aware that some of your receivables are going to take a longer time frame to come in, and just be cautious, I guess. As much as we all hope that like the switch will get flipped and off will go back to normal, it seems unrealistic. But I am encouraged at how much people pull together in a crisis like this, how much it builds bonds in business. So there's good opportunities coming out of this to be stronger, better, faster as we come through, and have stronger relationships with our customers, with our vendors, that sort of thing. And the reality is not every business is going to make it through. So the hope would be that those that do maybe have a little bit more opportunity as we come out. Some businesses will go from not being able to work to being busier than they are capable of handling the work as we come through, if they're able to get back to all the projects that have been backed up. So it may be, every industry is going to be quite different. So it'll just be dependent on what you're going through in your own industry.
So I think we've addressed all the questions from the guests, and I want to give folks an opportunity to ask one more if they have it while I'm asking my last question. And really, I was hoping for the opinions of the group around how folks anticipate the recovery and the return to some sense of normalcy might play out. So just, again, looking for an opinion. You're all business leaders that are planning your next moves. How long do you think that the current situation is going to last? I know, Craig, you mentioned you're probably looking through June before things start to emerge to a normal way of business. Mitch, you mentioned a longer recovery for your restaurants, perhaps, and your retailers as things slowly loosen up. How long do we think we're going to be in this situation? And just a corollary to that, what do we think the impact's going to be in the long term on people's ability to go out and spend money in these businesses, whether it's a retail shop or a restaurant or making additional investments in their businesses? How long do we expect it's going to take before we find a new normal or a new regular beat of life? Anybody want to start us off?
I can start off. We're expecting this to last longer than what is anticipated, because we believe that there's going to be a phase-in period. So we're certainly looking out June at least, if not further. I think there's a new normal that is developing. Businesses are reformulating their business plans, reformulating how they do business and how they approach businesses. Certainly we're doing the same. And coming out the other side, you're going to see strong businesses that are going to come out the other side and going to do very well in the marketplace as it is. Not going to be easy for anybody, but you're going to see a lot of different things that are going to come out of this. People are using imaginative ideas on how to continue on in business, and we fully see that. But we expect it to be a bit of a longer play and come in a slow play basis.
Thanks, Rick. Anyone else want to add their thoughts on how the recovery might play out?
Yeah,
Well,
Jeff.
I would like to hope that, sorry, I would like to
No,
hope
go ahead,
that, I would like to hope that localized, the recovery will be better than it will be. You know, people are going to hopefully be released from their containment. I just don't understand how we could continue to afford to do this for much longer. And hopefully the medical system and antibodies and vaccines and all those sorts of things will catch up to the virus, and we'll be able to resume some normalcy. But I know that is this a life redefining sort of episode, i.e., will we travel as much? Will we be more centric to our own communities? And I think that one thing I'd like to hope that all of us, I mean, I'm looking at the panel, and we've got some lawyers, some accountants, some consultants, a bankruptcy fellow. We need to support people that aren't like us, because if we come out on the other side and the only people that are left are guys like us, I don't think I want to live in that kind of society. So let's be nice to our artists and to our restaurants and to our all our creative people out there. And if they need a little help, let's give it to them.
Absolutely, absolutely. And certainly the spirit of this exercise and everyone volunteering today. So I'm very grateful for that. One final question that perhaps we'll end on is there was a question that came in while we were chatting around how this has impacted your relationships with your employees as business leaders. I think that's an interesting question. I know in our shop, if you had told me a month ago that we would be playing video games as a group over web conferences and having like a virtual happy hour to try to stay sane, I would have thought that was the biggest waste of time you could possibly propose. Now it's the highlight of my week. So certainly we're finding all sorts of new creative ways. I'm lucky to be blessed with a team that's much better at socializing than I am. So that's been really helpful. But I'm curious, in folks' businesses, I mean, all that water cooler banter that matters a lot and helps make these relationships work is gone all of a sudden. What are people doing? How are they making it work? And how are you managing those employee and team member relationships? Perhaps you're not. Perhaps I've made an assumption.
I've talked a lot, so I'm trying to back off.
Well, from a self-interested perspective, I hope they're all miserable, as are all your employees, and they want to come back and work in nice, lovely space. This whole distance work is great, but I'm counting on people being social animals and all wanting to be in the same office space, and Zoom will be bankrupt within 8 months.
An optimistic viewpoint for sure.
I can speak out on what we've had to do in order to keep sanity amongst a bunch of people that are sales oriented and are people oriented in our business, some 30 odd people. A lot of the video stuff, it is not going to replace that personal interaction. We've talked a lot about, do we need the office space we've got? At the end of the day, we fully believe we do. We are a people business. We miss the clients walking in the door, doing their motor license issuing, bring their new dogs in, pictures of their grandkids and all that kind of stuff. We miss that. You cannot replace that with technology. So the people part of our business is certainly missed. I know our staff miss a lot of that interaction that comes on an ongoing basis. We're just replacing with virtual happy hours and meetings on a day-to-day basis through Zoom and Teams, using Teams and Zoom a lot. So that is a temporary replacement. I don't believe it's a long-term replacement by any stretch of the imagination.
Jeff, if I can just chime in, when I read that question, because accountants, we have to be the doom and gloom guy sometime and look at the downside. I deal with a lot of businesses that have had to lay off almost their entire workforce. And that's why I read the question as, what do I do with these employees that maybe have an erosion of their trust in me and the business owner as having a responsibility for the employees? And I know that no one that I deal with that has had to lay off people took it lightly. It was a very difficult decision. And the thing about it is that for the business to be successful, the employees have to be engaged and with us for the long run, right? And so the hope is that those employees will have an evolution of their relationship with the business owner, and in terms of realizing that we're all on the same team. We want to be successful as a team, and the business owners in general do really, really appreciate their employees. They live and die for them. But in a case like this, sometimes it's just, well, if I keep paying my employees for 2 months when I have no revenue, well, then we're out of business. We're all out of a job. So my hope would be that the employees that see the longer picture, the larger view, and understand that we're all in this together will come out of this with a more of a strengthened relationship with their employers, and more of a, we'll call it an appreciation for what the business risks are in a private business, especially a locally owned private business. And those that expect to be taken care of, and sometimes you hear the complaints about people that are a little bit entitled as an employee, which is, it's fair and not fair in some cases, of course. But it's hopefully those people, if they go away, you don't really need them as much anyway. So I think there will be some effort required to rebuild trust in situations where people have had to be laid off. And even if you're laying off part of your team, there's a general uncertainty and fear amongst the rest of the team that we need to just communicate more. Are kind of going through the grief curve with this, as we all are, with the denial, anger, all that sort of stuff. So it's challenging on a lot of fronts. We have to recognize that coming out of this, things will be different. But hopefully it's with the ones that we keep and stick around with us, that the relationship is deepened and not eroded. But certainly I think there'll be a different type of trust in that employer-employee relationship as we come through this.
Yeah, I really appreciate your comments about living and dying for your teams. And I know we've heard that from a lot of our small business clients and all of our clients, quite frankly. And one of our initial concerns when these programs came out is it sort of seemed as though the first reaction from the government was, lay everybody off and we'll take care of them. And that was concerning because, you know, as you said, these relationships that develop are hugely valuable and really drive the success of a business. And it was hard to calculate what the damage to those relationships might be. So it's encouraging now that some of these new programs seem to be targeted at helping keep people in their jobs and productive and staying part of that team and that family. So definitely appreciate those comments. I want to offer the opportunity to the panel just to offer any parting thoughts or things that they might have wanted to say that they didn't get to say before we wrap up our session and adjourn for the day.
I could, just as a parting comment here, a reoccurring theme, I think, answering a lot of the questions that were put forward was communication. And one thing I can tell you in my line of work is a lot of times, by the time someone like me gets involved with a business, in many cases, it's because communication stopped. And whether that was through major suppliers or customers or employees or whatever the case may be. So not to make fun of it, but to avoid my presence in many businesses, the best thing you can do right now is be talking to all the stakeholders. And to go back to the employee comment and Jeff, your comment about how the idea was to lay everyone off and the government will take care of them financially. Just as was mentioned here, it isn't just the financial. A lot of the employees gain a lot by just being in the office and being around each other. So, you know, if you're looking for ways to help them, sometimes it might be just staying in touch with them, keeping them up to date as to what you're doing as a business owner. But the most important thing I can suggest is communication, even if it's bad information. You know, as Mitch said, as a landlord, they want to know, your stakeholders want to know, and they want to help, especially in this time. So as difficult as some of those calls might be, your best option is to make them and start having those discussions now.
Couldn't agree more. Thanks, Eric. Any other thoughts from the panel? Rick?
Yeah, I do have one comment I see in the Q&A, loss about business insurance, which hasn't been talked about at this point in time. So I'll hit that head on. Business interruption insurance that has been in place for the start of my days in the insurance career, that goes back to the 70s, has always been there needs to be a physical loss within the property in order to trigger the policy. The best advice I can give to anybody who is listening to this at this point in time: keep really good financial records. We do not know where this is going to come out at the end of the day. There could be government involvement, as happened in the High River floods and stuff like this. We don't know how the insurance industry will treat it, but do keep financial records. You have to prove your loss at the end of the day. That's the best advice I can give. From a wording standpoint, it isn't helpful on the fact that it was not anticipated a pandemic like this to hit certainly the financial marketplace across the North America, for sure, Europe and the world. So the industry's triggers within these policies are not there. There are civil authority denied access type wordings within all these policies. So at this point in time, I don't think decisions have been made as to how these will be treated. But down the road, if there is some access to it, you'll be dealing with your brokers on each individual case. They'll all matter, and they'll all be done on a one-by-one basis. But financial records are imperative, because without them, you are nowhere. So reach out and make sure your accounting records are real strong, because if there is an opportunity down the road, which there may be, you want to be able to take advantage. So it's the best advice I can give at this point in time. And I don't know whether I answered the question. So
No, I think you did.
Leave it at
And,
that.
excellent advice. Any other parting thoughts from the panel before we wrap this up? All right. Well, I just want to thank everyone who made time today to join us on the call. I know it's difficult with everyone being so busy and trying to work through this in their own businesses and manage all the different challenges that we're now faced with, childcare, et cetera. It's really great to see people come out for 2 hours and hopefully help some people out. I want to thank all of our panelists for volunteering their time. And I wanted to share with folks that the recording of this session should be up hopefully by the end of today. It'll be accessible from the Business Resilience Series website, which is www.resilienceseries.com. That's just a handy page where you can access some information from our partners, which include Economic Development Regina, Regina Downtown Business Improvement District, the Regina Warehouse Business Improvement District, Path CoWork, and of course our organization Ascent Strategy. The best way, as I said before, that you can help us continue to offer these sessions if they're of interest is by signing up for them. The second session is already up, which is on April 14th, which is a Tuesday, so you can sign up for that if you'd like to attend. Share the videos around, share the links around if you're able to. We want to make sure as many folks can benefit from this information as they can. Also, at the resilienceseries.com website, there's a great place where you can sign up to join a mailing list for updates from the various partner organizations that have brought this session to you. And you can always unsubscribe if at some point they no longer become relevant. But that's probably your best bet to make sure you're constantly in the loop of the various bits of information and analysis that are coming out of some of those partner organizations. Again, you can also access the partners' websites from that site, and EDR, the Downtown Warehouse, are all mounting efforts to connect folks that are affected with additional resources and help. And also they're looking for information to inform their advocacy efforts and help governments make good decisions to help businesses during this difficult time. The other piece there is you can pre-submit questions or topic ideas for future sessions. And certainly that's helpful to me as we sort of chart the curriculum, so to speak, over the next month. And it's also extremely helpful as we look to try to find panelists that can help you with the types of things you're struggling with and the challenges that you're facing right now. So certainly we hope that everyone stays healthy. We hope that everybody's families are all right. We're wishing you every success in your business and hoping that this session was helpful. And we look forward to seeing as many of you and more next week when we do this again on Tuesday, April 14th. So that does it for our first session. Again, thank you to our panelists. Thank you to our community partners. And thank you to everybody that joined us today. And be well.
Thank you all.
Thank you, everybody.
Thanks,
Thank
everyone.
you.
Thank
See
you.
you.
Take care.